Mark Collinsworth with us again here today from Vere Global. And Mark, as you predicted yesterday, the market did a rally today, but not that great of a rally. How come?
Well, it could be for several things. The things that actually caused the rally today was we actually came back and actually retested the 2018 lows, which markets normally have to retest lows to form a bottom. So that got the market going. There was some positive news that came out of Washington, D.C. on trying to get a stimulus package put in place. But again, we're so used to seeing these huge sell-offs, then seeing small rallies the day after with no follow-through. So tomorrow we really need to see another positive day to at least see the traction and momentum is still going forward.
And how likely do you think that'll happen tomorrow?
Well, based on past history of the last 20 years, I say there's a very good chance that would happen. But things that should happen here in the last 6 to 7 days have just totally defied 50 years of stock market history and events.
And of course, that's largely due to the new elements of the coronavirus. So it's not like the usual market indicators are in play. This is kind of like coming out of left field. So the way it's interacting with natural market and traditional market forces is still largely unpredictable, correct?
That is correct. That's a very good question. Bank of America has a thing called the bull and bear contrarian indicator. It has a fantastic track record of telling you when to get out of the market and when to get back into the market. The indicator did just flash a buy signal. However, it did not flash a sell signal to get you out of the market. So that kind of tells you the things that have caused the stock market to sell off has never happened in history before. So since the things that caused the sell-off have never happened, do the things that cause you to get back in the market, are those indicators still relevant today?
Big question, which will remain, I guess, for a while. So therefore, we are still trying to muddle through largely uncharted waters.
Correct. And just to give you another example, today the stock market during the rally actually took a dip when the mayor of New York actually said that the number of people with coronavirus actually had an additional 300. The market actually tapered off a little bit on that news. And now that we're starting more and more testing, I think when you see the numbers in the United States grow, I think that will bring additional selling pressure into the market.
Well, now, you've been saying for a while, and I heard other commentators today after today's close, that it's still a good time for bargain hunting. There's a lot of good stocks out there that you could make money on if you buy now. Do you agree with that?
Yeah, there's some stocks today. If you buy certain stocks today that have been so beaten up and offer so much value that are great run companies, if you buy today, you'll be a very happy camper in the next 2 or 3 years. The question is, if you buy today, will you be a happy camper 6 or 7 days from today?
And again, keep the emotion out of it, stick with it if it's a good stock.
If it's a good company selling a great product, I mean, was Apple Computers a great company a month ago? Yes. Is it still a great company today? Yes. If you buy the stock today, will it be a great investment a year from now? Probably so. But the big question is, will it be a great investment in 72 hours from now?
Yeah, so what you're saying is, if in 72 hours it's not a great company, that's temporary, and you shouldn't panic. You should stick with a stock like that.
Correct, and that's the key to investing, Larry, is people like Warren Buffett and Julian Robertson. They're very good stock pickers, but they're much better at controlling their emotions when things get hot and heavy like this.
Yeah, as a matter of fact, I mean that's a key, right? Not to panic, not to go on a roller coaster of emotions, and stick with it. First of all, identify a good stock and then stick with it. Now, what stocks to you, off the top of your head, are kind of recession-proof here, despite what's going on with coronavirus, the global slowdown? Which stocks are going to endure by the very nature of the product or services that they provide?
Think about things that you use every day. Walk into your pantry. What kind of foods do you have? Do you have stuff like Campbell's soup? Do you have, Coca-Cola and Pepsi and Dorito products in your house? Things that people have to consume every single day. Those are really the companies that are classified as recession-proof.
Yeah, in other words, what will people always need, no matter what happens? Procter and Gamble. Well, paper towels and toilet paper, right? Which is a continuing need, and they become increasingly important in an uncertain time.
That's correct. And the crazy thing about it, it's not like, you're not going to use more toilet paper. You're going to always use the same amount every week.
Yeah, and so it's a continuing market. Um, what other off the top of your head is a good long-term investment because of the very nature of the product or the service?
Well, if you're looking at recession proof, and of course, this is the thing you also have to remember, recession proof stocks only last or only good investments during the recessionary period. Once the recession ends, people, kind of like dump those stocks. So if you're looking beyond the recession, companies, again, like, your Apples, your Amazons, your MasterCards, things that people are still going to use every single day, no matter what. And speaking of that, Amazon could actually be recession proof for this particular instance because so many people now are staying at home and buying stuff off the internet from Amazon. That they even Amazon announced just yesterday they're going to hire 100,000 more people because they've got so much demand they can't keep up with all the orders.
Yeah. Now, yesterday also you mentioned the stocks to stay away from. Are you recommending the same stocks to stay away from, and maybe even more so today than yesterday, and maybe an expansion of those stocks to red flag?
Correct. The things I would stay away from is the airline industry. I'd stay away from anything like casinos, your hotel chains, and things like that. There's just so much uncertainty because even though once the coronavirus is actually, stopped dead in its tracks, how long does it take people to feel comfortable enough to actually go back on a cruise ship or actually go and stay at a hotel?
Well, what if you just hold on to the stock and wait, even if you have to wait a year or two? Or is it that a case then we could be making more money in the meantime with a stock that's doing better before you go back to an airline?
Well, that's a good point. And that's what they refer to as opportunity cost. Is it better to buy a stock today that you might not make any money on for 2 years, even though it's a good value, or is it better to buy a company that's a little bit more pricier, but you're going to make more money off of it over the next 12 months?
And what's the answer to that?
It really depends on your risk aptitude. If you want to make money, if you're more of a intermediate term investor, I'd say buy companies that you could hold forever. If you're more scared about the economy, go out and buy the recession proof stocks. But me personally, I think as long as you're looking at great companies are undervalued, recession proof or not, they're still great. They're still great investments long term.
All right, Mark Collinsworth of Vere Global. Once again, thanks for your advice and closing remark. Now, you expect the market to do what tomorrow? And again, in a nutshell, what's your advice to investors for tomorrow as the markets open again?
Well, tomorrow the opening bell is going to be very important because even when you do have big rallies like this, you normally see a little bit of profit taking from people that are your day traders that jumped in earlier this morning and they want to close out and take a little profit. So the first hour is going to tell us a lot about how the rest of the day is going to play out. But for investors, like I said, if you have if you have a wish list of stocks, never go in and buy all of your money or never use up all your dry powder at once. Just nibble on stocks. Buy a little bit here, buy a little bit there, and spread it out. And remember, whenever you get big market sell-offs, coronavirus, 87 stock market crash, 9/11, all those events, markets take weeks for the volatility to actually calm down. So don't expect anything that you've seen today or the day before to stop. Those events usually stretch out over several weeks of being very, very volatile in
And
nature.
in the meantime, try to stay as calm as possible.
Try to stay as calm as possible, and probably the two best ways of doing that, don't watch the TV.
Just what we do every day. All right, Mark, thanks once again for being with us. Mark Collinsworth of Vere Global Investments. Thanks a lot.